All right. Good morning, good afternoon, good evening. Welcome to the Inner Circle Live Pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely so happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So every morning we start off by taking massive action, making sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. Let's make sure that we take a deep breath and center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. Let's trust in our education, our strategy, our trading skills, and intuition. And let's imagine our trades successfully materializing. And let's make sure that we obey our trading strategies, avoiding decisions based on greed and fear. And we are never looking back or stopping once our trade has commenced. So if everybody is ready to go, drop me a huge one in the chat. Let me know you can hear me loud and clear. A few technical difficulties this morning, but I think I've got us all together. Now, I see the ones. Yep. So we must be all good. I appreciate it. Appreciate the ones coming in, the early participation. So let's close out of this and move over to trading economics, right? So yesterday, we were talking about the FOMC meeting, the statement. Let's click here first. We can see that they held rates coming in again for another meeting. So the forecast was 5.25 holding rates, and that's exactly what the Federal Reserve did. And then moving on to the press conference, you can see here that Powell rules out interest rate hike, right? So left it within the 5.25, 5.5% range as expected, and announced it would slow the pace of quantitative tightening beginning June 1st. During the press conference, Powell said that while the central bank is attentive to inflation risk, it is unlikely for the next move to be a hike. At the same time, Powell reinstated from offering a timeline on rate cuts. Okay. Beginning of the year, market projected 6 rate cuts. Fed said no 3. Came into a meeting, the Fed said our dot plot still calls for 3 rate cuts, right? And then we did have, right, difference in opinion, okay? Through some of the Fed members, Bostic, I know early, said, hey, probably only get 1 rate cut this year. And now we're wondering if we can even get a rate cut this year, right? So we'll continue to monitor it, right? Don't bet against the Fed. Joy, he was very careful with his words. He is always very careful and measured for sure. People keep asking him the same redundant question about, does the fact that we're in an election season influence their decision making? And you could tell he was getting a little frustrated, and he told the reporter, no, right? There was no mention. If you look at the notes, look at the statement, there's no mention from any members regarding it being an election season. It doesn't apply with their decision making. That's what he said. Had to take him at his word, right? Because he said if you bring in too many variables, where does it end? Okay. So that's where we are with the dollar. So we'll take a look at that. The yen remains volatile after suspected intervention, right? Ryan was talking about that yesterday. It is suspected that the Bank of Japan did intervene. We'll see, right? We'll look at the charts. If they did intervene with trillions of dollars or whatever some people are speculating the move was, I'm not sure if they got the return they were looking for. So we'll continue to watch the yen. Australian cherry surplus is smallest in over 3 years, even though the Australian dollar has been a little bit bullish as of late. Swiss inflation rate picks up 4-month high. So if we come here, this was Wednesday. Jolts. Well, before we go to looking at that CPI out of Switzerland, private sector yesterday, Wednesday, May 1st, came in. ADP non-farm came in at ADP non-farm private sector jobs came in at 192,000 on the forecast was 179, so that came over uh, above forecast. That's good for the dollar. CAD manufacturing PMI came through 49.4, so below 50. Little contraction there with the Canadian dollar. And then the United States came in just below 50 for the ISM manufacturing. And Joe's jobs opening missed forecast 8.68. What's the forecast came in at 8.49. So we're seeing some tightening in some spots. All right. ISM manufacturing prices came in above. So inflation, right? Of course, we know that remaining sticky from the previous reports. Moving down, came in 2:30 this morning. As we were looking, we've got some Swiss plays, some 80-20 plays out there. CPI came through for Switzerland. The forecast was 0.1%, came in at 0.3. Okay. Inflation. Okay. Inflation. So we'll take a look at that and how that came out on the charts at 8:30. We've got unemployment claims for the United States. We do have Bank of Canada Governor Macron speaking at 8:45. Not sure what that's going to be about yet. And then, of course, on Friday, we know we've got non-farm payroll. So all eyes will be on that report for tomorrow and the ISM Services PMI as well. So super, super busy week. Ryan, good morning, sir. How are you?
Bro, good morning. I'm doing well, man. Every day getting better and better. How about yourself?
Doing pretty good, man. Always glad to be here with the crew, right? Always glad to be in the inner circle talking trading. The yen, more and more people are saying, yep, they definitely intervened. And then I mean, we saw the corrections in the market. I don't know if they got what they were looking for, but we know we have a bank holiday coming up. Uh, not a bank holiday, but a holiday, right? In Japan, was it
What?
Sunday, Monday,
Yep. So there's a holiday on Monday, but there's also one on Friday.
Friday?
But this is actually speaking about a second potential intervention. Um,
Yes.
Yesterday at the last hour of market open. Um, so at like 4 o'clock yesterday afternoon, this is a second intervention. They saw a spike of yen futures. Um, and so they're suspecting that the Bank of Japan came in with another. So initially it was 5.5 billion yen assumed. This time it was another 4 billion yen. I'm first on 5.5 trillion. This time 4 billion expected. So this is a second intervention uh assumption in a 3 day time, 3 4 day time frame. So um I think that's their signal to the market, like, hey, we're still here. um, and it may happen again. Saying as Friday is another holiday for them. Um, so if they didn't get the reaction that they wanted with the second one, we could potentially see a third. Um, so it'll be interesting to see how the week closes for Japan. But
Yeah.
yeah.
Yeah. So here's the thing, right? Then it's probably gonna come down to non-farm in those numbers
Yep.
coming from the non-farm, right? Because that's gonna impact the dollar yen. It's a bank holiday on Friday, so we know that. I mean, I don't think it's a bank holiday. It's just a holiday, right?
It's just
That
a
they
holiday,
have
yeah.
just a holiday, right? I keep saying bank holiday. Um, so we know they'll be available and they'll be watching,
Yep.
right? And it's a holiday, so we'll see what happens coming out of the weekend with that. I guess though, I'm saying they're not getting what they want, but if they have the Bank of Japan has certain assets on their books, things that they've invested in, things that they're holding on their balance sheet, that they could benefit, either way. So we'll see. We'll see how that goes. But that's pretty much the fundamentals. Any questions on anything that we've gone over?
Of course, I have a question. It was
Sure.
reported that OPEC was extending cuts. until June?
Yep.
What does that? It's a voluntary cut. What does that mean?
That they're gonna cut production because you had just keeping it balanced, right? The ebbs and flows of oil. We've seen it make a move correct to the downside as of late, right? So they're gonna probably cut their output, but we just recently had a report that US stockpiles increased, right? And stockpiles increase as far as the supply. So you can't have a if you have a gluttony of oil out there and the demand is not where it needs to be, then you're just sitting on it and can drive the price down, right? So they're probably gonna cut supply to prop up the price of oil, right? To keep it within whatever range that they have. So that's a possibility. Mhm. You're welcome. Any other questions? No. All right. So, quick look, right? We know we have people who are right have started in on the Darwin. This is how it is still mine is still calibrating, right? So if you're swing trading, maybe a little bit slower to calibrate, depending on how many trades you have and things like that. But I started this on the 19th of April, and then I went flat. I look back, I wish I would have held a lot of them because they went my way. But I went flat ahead of the FOMC meeting, so I closed out at a 1.28% gain. So not bad from April 19th to May 1st. So 1.28% right now. How many people do we have right now that's currently started their Darwin accounts? Joy, Kay, all right, JC, Neat, good,
So
good.
Jeremy in the mix too. Then we got like six or seven.
That's good. Paid for, but
Reese.
haven't placed a trade yet. Done that. Reese, awesome, awesome. Yeah, yeah, that's good. That's good. Haven't placed a trade yet. Yep. So I haven't placed a trade yet for May either. So just continue to watch, but that's where and you'll start to see these come through in the community as well, keeping everybody updated with some screenshots or something. I think it's fun. I think it's a great opportunity. Ryan, what are your thoughts? Creating an account tomorrow, Tyrone. Yeah, I think it's gonna be good for this group.
Oh man, I'm super excited about it, dude. It'll definitely be fun. It'll be a challenge for all of us, right? Um, but I think it's a really great opportunity to we talk about, especially with new traders, getting new traders to take that first trade, right? I think this is a phenomenal way to really integrate yourself into the space and a risk-free opportunity, but it also is an accountability piece as well, right? It'll hold you accountable because you can grow this thing, right? And you can build this track record that can really become something phenomenal for you if you stay committed to it. So I think it's absolutely phenomenal. I think we're gonna have a good time with it. And I think we're gonna all grow immensely from it.
Absolutely, right? So slow and steady wins the race, everybody. Slow and steady wins the race. Follow your strategy. Make sure that you evaluate each and every trade that you take. Right? And you guys will be just fine. So kudos to all of you. Drop you some sevens in the chat, for diving into it, and making it happen. Let's go. Right. All right. So that's that there. So back to the charts, right? Moving on, taking a look at the DXY, we can see here on our daily, right? Where we're range bound, right? We're a bit range bound. And oftentimes you'll get that, especially when you had a key rate decision looming, right? And then we've got non-farm payroll coming up on Friday, right? So you can see it's just bouncing around. If you move down to the 4. Okay, you can see that range, but you can see we're within the AB boundary on the 4. So dollar strong, just ranging right now, right? So you can see where we had that initial low, and then we've just been, clearing ABCD waves all the way up. So we need to find out what's going to go on. Now that ADP private sector came through at 192 beat forecast. Doesn't always mean that the non-foreign payroll on Friday is going to beat forecast, right? Sometimes we've seen over the years the exact opposite. So fundamentals, so everybody knows. So everybody knows, and it's clear on what the fundamentals are, so you don't get caught and get surprised by anything. Can everybody still hear me loud and clear?
Yes.
Yes.
Okay. All right. Still having, I guess, some things popping up. So, all right. So let's move on. Let's take a look at. I know we have posted the CAD Swiss. We've got some weakness out of the Canadian dollar right now. And so when we take a look at this let's look at the weekly, and we can see how we made the move against the Swissy. So now we're correcting, right? Correcting to the upside. Keep in mind, you think about what we saw technically that this was due for a correction. We had an 80-20 on the 1 hour. What could be the catalyst being that we've been pretty much long against the Swiss, but what would be the catalyst for a correction like that? Well, we saw the report early this morning around 2:30 that they had a sticky inflation report, right? So came in above forecast, their CPI, and so you can see we're correcting right now. So you can see the initial long, the larger play on the 4 for the CAD Swiss. We broke that trend line a long time ago. Now we're turning over and we're correcting, right? So we still have a situation where, second, everybody. I don't know why. So it's going to deal with it, but it's session. But we still have a situation where we're still looking here for, right, a pullback. And then a possible continuation, okay? And we're seeing that play out on the 1, okay? We can see where we had the 80-20 play, okay? We're coming into TP1. So what we want to see is, do we hold, right, in our buy zone, and do we get that reversal? Same thing over and over again. Same thing over and over again. So we got the spike here. It didn't carry through and hit the stop, whereas on the Euro Swissy play, it shot up, hit the stop, and then it reversed out on the next fib. So just time is just off on that one. But this one played out to TP1. Any questions?
No, sir.
All right. So speaking of that, let's move on and take a look at this Euro Swissy play. We'll see where it missed. Okay. So the same thing you can see, right? You can see the similar price action where we've got that U-turn off the lows with these Swiss crosses. And then if you come here, you can see where we're getting that correction, just like we were talking about on the same pair. So similar price action. We'll run this, I'm gonna run this sub-fib here. There, you can see how that's turning over on the 4. So we want to keep an eye on that. Whereas here, this is what happened. So here was your 1 hour play. Okay. Price just continued to push up. So we got that initial move down. Okay. Now, depending on if you adjusted your stop, depends on whether or not you took the hit on this, but it moved down quite a bit. Right? But then we got the U-turn and the acceleration that ran up through the stop. Then price collapse, right? I can't stand when that happens, but it is what it is. So ultimately, we got the correction to the downside, right? But it was late, right? It was late. So pushed down quite a bit, shot U-turn, shot through the stop, and then we turned over and got the move that we wanted. So we probably will move down through those levels, but that one was technically a miss based off the 1 hour, based off the 1 hour markup. So right now, right now, what I'm looking for on this Euro Swissy, okay, is tracking it off this 4 as it comes down into the buy zone. Okay, so we broke this inner trend line, broke this outer trend line. We want to see if we can settle, right? Settle at the 61.8 zone and test the backside of that trend line. Okay, so this is one that you want to put on your radar to see if we eventually settle down and continue and right make that C to D push, right? So that could be a nice one, but we have to be patient with it. Any questions on the Euro Swiss? No?
No, sir.
All right. So want to move up and take a look at move down, and take a look at this this dollar Swiss. And so you can see when you take a look at all the pairs and you evaluate everything, um, it gives you, a good idea in regards to just by looking at the pairs and using the Fibonacci sequence, it gives you a good idea in regards to what currency is actually showing weakness and which ones are showing strength, right? But then you can back that up by going to investing.com, taking a look at the technical summaries, but you can see where that Swiss is gaining some strength. Now, this here is the dollar Swissy played 4 hour. Okay. So I want to show everybody this just ahead of non-farm payroll tomorrow. This is a technical 80-20. So we'll see if we get pullbacks and continuations to the downside. So that one's just coming out of the zone. So you can see here on this, let me back it out. On this 1 hour, right? So keep an eye on this one. I could take this out now. That's the old play. Right. Keep an eye on this one, right? As we wanna watch, see what the results are tomorrow from non-farm payroll. That's what's going to determine, right, whether or not we get pullbacks and further moves down on that 4 hour play, or if this is going to settle and get back along. Because you can see here where we are. This has come back down to a weekly support level. Right? And we can see where we had quite the fight around this level last time before it found some momentum. You can see here where you had the fight and you had the bears come in and push that price down on that fundamental occurrence. But then look at here how we consolidated, we broke out, and we're coming right back to this level. So this 91.10 level is key. Okay, it's key. So we know what we're seeing technically, right, on 2 different time frames. But it's always about that support and resistance game. So we want to see and we want to know, is this going to be the level to where we get buyers that come back in and this price holds? Or based on that data tomorrow, does it serve as a catalyst to push this price further down? Okay. If it does, then we look for pullbacks and continuations. If we get and we push and we crash below and we hold below that 91.10 level, then we look for further declines. Right. If not, we may get a push. Okay, so let's continue to wait on that. We know where we are with the dollar in regards to the Fed. They're holding rates, they're not cutting. Okay. Didn't give us any sign or date as to when they will look to cut rates either. All right, so I'm still looking at dollar strength. It's just a matter of where we're going to pick those buys back up. Any questions on the dollar, Swissy?
Penny, when you look
Yes.
at the dollar too, the 4 hour, the 1 hour, the 30 minute all hit 61.8 levels. So it's so tricky.
It is. It is. It is, right? We were taking a look at this on the 4 hour, how it's in that range. And they can be, it kind of, and at times when the dollar gets range bound, like we're seeing, it kind of can tie the whole market up, and then you need some catalyst to get things back going. But this is always difficult, to gauge, right? And it's telling you that, right? So if I'm not trending up or down and I'm moving sideways, the market's having a hard time, right? That's why it's trapped. That's why it's trapped in the range. So that provides us with the visual of what we're thinking, right? That dang, this is difficult, right? Because it's not trending either way. We always really want to play a trending market. We could play larger ranges. Like if this is again just playing into what I just said, like if the dollar is going to stay range bound, the question becomes, is this the bottom? Is this the bottom of the range, right? That we're seeing. And are we going to push back to the top of the range? And then we may come back down, but does a move up with non-farm tomorrow serve as a catalyst to make some of those plays that we're looking at, like that dollar Swissy, start to move back to the upside? So this is the issue here. This is the issue. So, yep, it definitely does. So that's why we have to be patient, right? And I will tell you, like, just from my experience, that capital matters, right? How much capital you have, because if you have a really strong account, sometimes psychologically that could put you in situations where you're not making the best trades because it's like, I'm trying to grow this small account, but you have to continue to be patient. But now, right, with the opportunity that I'm proud to see a lot of you all are taking, with the Darwin, you have an opportunity to play with some capital, right? Even when you get to your calibration stage and when you guys get your initial allocation, right? I didn't say if, when, right? Didn't say if, I said when, okay? Because it's only a matter of time. But say you get 30K allocation, right? Joy, I'm still acting broke. Yeah, that's all right. Say you get a 30K allocation, right? It's not like these other props. Yes, they don't pay you 80-90%, which it hasn't proven to be a sustainable model anyway. They're paying you 15%, but that's on a 30K account where they're not saying, hey, this is your daily max drawdown, right? So they're not saying, hey, we're giving you 30K, but your max drawdown is 6%, which is 1,800. Okay, which means that's really what you're trading. Okay, so hey, we giving you 30,000, but your max drawdown is 6%. Well, that's what you're trading, 1,800. They're not telling you that with Darwin. They're saying, hey, here's 30K, make everything you can. We're gonna pay you 15%. Okay, so think about that. Okay, so and that's what a minimum allocation at 30K. What I'm talking about. We're not talking about the other stuff. So. Again, great opportunity. So, yeah, it could be a little tricky, and we just have to continue to be patient. We wanted to take a look at this S&P. Didn't want the morning to get away without taking a look at that. All right. So we can see how, which is bouncing around this level here. We've come to this level again, right here and here. Right, we were talking about that key support. We've got a daily stochastic that's in the sell zone. So the question, right, we got a little bit of a boost because we've got, major corporations that were reporting over the last couple of weeks. But we're still, the verdict's still out on whether or not we continue to move to the downside. We could see another drive down, right, which is what this 80-20 is telling us. So let's make sure that we pay close attention to that. Apple earnings today, I think so too. I think so. I think you're right on that, Joy. So we'll see how Apple comes through. Appreciate that. Yep. So that's your S&P, right? Taking a look at our Dow. Right? And I'm doing this because this is we're a day away from non-farm payroll, which is major. Okay, so we've got to pay attention to see where we are. So here we are. Okay, major correction. Market's coming into support at 37,833, and we're just hovering. So we got the reversal. Now we're sitting here past resistance, becoming future support just ahead of non-farm. So let's see what happens. Didn't do a whole lot yesterday with the Fed data either way, right? So not the most not the most ideal conditions,
Hey,
right?
Benny,
Yes,
can you look at the 15 on the S&P?
I will. I will take a look at the 15 for you. I'll go right back in a second.
Okay.
So here we are. So we actually got it on the NAS, right? So the NASDAQ 100, this one actually pushed our way down, right? So that's a beautiful play from the day. That's a major move. So if anybody played that move on the indices there from that daily, that's a beautiful correction. That's what we want to see. Is that right there. So now it's just a matter of whether or not we get one more turnover, one more drive down into the buy zone from the daily time frame. All right, it's possible. Right, it's possible. Okay. All right. So going back to the S&P. Right, and you want to see the 15, right?
Yeah. So yesterday I played move. It was a 80-20 on the 1 hour. And I was looking at the 15 for the turnaround. And I couldn't close out of it about as quick as it came back.
Oh wow. Yeah.
And so I was looking at the cloud with the fib on the 15, and I mean it's just sitting there, and it's just for a move back up. Looking forward to head back down.
Yeah, it's let me see. Right. Yeah, so we broke the cloud moving higher. Okay, let's see. But you just said it though. That's gonna impact the S&P, right? Those Apple earnings. It's a question. I wonder though, is that coming after is that coming after hours today? I don't know.
I don't know. I seen my alert and I didn't open it, so it just said Apple's earning today. So I didn't see what time it was gonna come.
Yeah. So but this is prime why I kind of just sit on the sidelines, everybody. So when we talk about like, man, I don't really like trading the news, right? I kind of just sit back. Ryan said 5 p.m. So that's after hours. That's what I thought they were gonna do. So I wonder if we'll see gap ups or gap downs tomorrow with the market. Thanks, Ryan. So, but this is like look at this move. It's a beautiful Joy when you were watching this because that's a beautiful consolidation in the breakout. But look how quick I mean, it's a 50. I say it's quick because how large the candles are, but I mean, it is 15-minute chart, so it wasn't too quick. It just took back everything that it gained. Now the question is, right? We'll see. Does it take out this high and continue long? We're breaking above the cloud now on that. So appreciate you bringing my attention to that. All of our attention to that. It's fascinating. Right? So that's the that's the S&P. Let's go and take a look. I want to take a look at the rest of these dollar pairs uh, headed down for tomorrow. So we know we have a Canadian dollar that's fairly weak. So it just depends on where we are in our sequence. So we know the dollar's been strong. Right? So we know what we would prefer, right? Just being patient. Hold on one second, everybody. All right. So we know what we would prefer. We want to see this move to our low price. Okay. Then we want to look to pick that up because that's going to put us right in an awesome risk to reward scenario. Here we are on the one, and we can see how we got that break up, but we still want to see that move lower, right? We want to see if we can get that to move lower. So let's continue to be patient with this. You all see how this really creates good filters to your trading, right? It's not always about being right or wrong. It's about taking smart trades, right? And then living with the results because that's where your edge is taking smart trades. So there's no sense in me, right? If I have rules that say I need price to be in my buy zone, there's no sense in me trying to take smaller trades in between, trying to make something out of nothing, right? There's just no reason to do it. And again, like we said, we're saying build that discipline now, right? And we've said that for the longest time. So when you do have opportunities to play with more capital, that you've already built that discipline. You've already made your major mistakes. You've already been impatient. Now you've started to master the ability to be more patient. Okay. Because when you're talking 1 to 2% on 100,000, 200,000, 300,000, right? Doesn't seem much when you're trading a $500 account, right? But this is why we say focus on pips and percentages, pips and percentages. That's what matters. Because when we think about things all the time in dollars and cents, we attach it to things. We attach it psychologically to bills that need to be paid, car notes, electric bills, things like that. And you have to be indifferent. So that's why we always say, think of it in pips and percentages. You have to, right? You have to. Okay. Window installation. Oh, that happened to me last year, boy. So what percentage of my budget did that crush? But yeah. So think about it like that. Just think about things differently. It's not trading when you see the price action. Yeah, that's it, Jeremy. That's it. You just want to snatch and grab a hold of everything, of everything. But you could see how, for example, on this last pair, right? And this is key in why I'm going over this, right? Because if we don't get this, there's no sense in looking at, you know, 20 other charts, right? If you play this on this last fib, the one that's no longer active, to where we hit the 281 and whatnot, your risk to reward plays out better and you stay safe, right? You stay safe because if you take it at some of these higher levels and you jump at every single wave that seems like it's about to take off, then you get caught getting whipsawed, and now you're in a lot more drawdown than you need to be. And that's frustrating. And you jump out of trades, you know. I was on a webinar the other day and I was talking to Ryan that it was a matter of fact, it was a MTI webinar. Just logging in to see if there's anything new that they're doing. But one of the reps said that looking at all of their research, right? Because they can eye accounts. So a lot of traders have, their accounts and their orders tied in, right? Their broker attached to smart traders. So the data is there for them in regards to the price action and looking at, the overall movement of people's accounts and things like that. And what they can see is that oftentimes retail traders have it right. Let me say that again. Oftentimes what their data shows is that retail traders have it right. The issue is they're in early and they're over leveraged. So it forces them to bail on positions that they ultimately get right. Yep, done that. Looking at structure breaks and retest. Okay. So if you jump in, if you don't wait on your sweet spots, and you jump into trades early, this whipping around of the price action, right, will drive you crazy, and you will jump out of positions that 281 pips later you had right. Yep. Yeah, they can see like when they can see like because it's attached to the smart trader, so they can see just the overall like price action and things like that, you know, and what's going on, on the charts. That's how they know like our traders they could tell you how many pips, their traders who are connected with their broker to smart trader, how many pips they've gained over, you know, however many years they're able to collect that data, which is pretty cool to see that they could track that. That was the dollar CAD. I want to take a look at this dollar yen, Jeremy. So, um, taking a look at this dollar yen, right where we are, you can see on this daily chart where we're at 80-20, right? And this is quite interesting considering we've got non-form, considering that we're looking at a possible intervention from Japan, further intervention from Japan, right? I think the verdict is out that they did intervene, but you can see here where to whatever level they intervene, it didn't get much, right? It's still holding. So we'll see if over the weekend, right, we get a move. We get a move. So just keep that in mind with the dollar yen, where we are on that daily chart. We hit that weekly D extension a long time ago. You can see the wicked reaction that we got as a result. So here we are. We'll take a look at it from the weekly. See exactly what we're talking about. So we ended up, Joyce said, sitting at 159.35. Wow. So you can see, wow, that's good. That's good. That's really good. That's a good entry. So we can see that when we mapped out from the weekly and we said that 156 level is going to be hit, especially when it took out the previous high, we were spot on. We were spot on. 156.40. Nailed it. And then some. Okay. Right. There's no denying that, right? No denying that the market moves in the Fibonacci sequence. Okay. 118 extension. Now we're getting a reaction. And we're in a sweet spot on the daily. So let's continue to watch, right? Here's the one. Where this is just all types of mess here. that's just a mess, right? 80-20, right? But this price action is crazy. Okay? That's how you know they stepped in and they did something. Okay. And we'll know coming out of the weekend too, right? Like when we move and especially like tomorrow, if you don't see a lot of other currencies moving like with high volatility, but you see that yen moving like gangbusters, they're stepping in again, right? They're stepping in again. So that's where we are on the one.
They have a
That's
holiday tomorrow. Oh,
right, but they still have the ability to make the move for sure. They do. The holiday tomorrow, it just is just that's just more time they can spend watching and deciding what they want to do. You know, that they have it tomorrow and Monday.
No. It was this Monday
Oh, this
and
Monday,
tomorrow. Yep. So
tomorrow.
Monday that just
Okay.
passed when they expect to
Okay.
first intervene,
Tomorrow and then
and then
tomorrow.
tomorrow.
Okay.
And generally, right, so it's low liquidity in Japan. So generally they like to do it during low liquidity times, right? To
Right.
get the most bang for their buck.
Yeah. So I
Yeah.
thought they were on. So, okay. I thought they were on it again on Monday. I thought it was a follow through from the Friday.
No,
So
if
so
I'm
they're
not
back open
mistaken.
on Monday.
Yeah,
Got it.
Sunday the 28th, kind of our Monday, right? Was a
So that's what I
holiday
was
for.
saying.
Yep,
That's what
and
I was
then
saying. Okay.
yep, and then tomorrow. The other thing too is what was I gonna say? Oh, the for the scenario yesterday, because um they saw the movement on the future side and the futures contracts, we might see that show up on the COT report.
Okay.
Whereas the first intervention on Monday, we won't have confirmation of that until the end of next month.
Right. Right.
So that might be a way for us to see as well once that data comes out.
Okay. Okay. So that okay. I get it. I get it now. So we'll see. We shall see. I'm just gonna sit back till the dust settles on this one. On this one. But I know you've been building short positions, so this move to the downside is actually good for you.
Yep.
It
So I
should be.
was waiting on the dollar yen. So I just put in my first position on that one. I'm at 156,563. Um, but the others I've been building positions on. So the Swiss yen, euro yen, pound yen.
That's good.
So yeah,
That's good. Great work, man. Put you some sevens in the chat because you've been on that and having the confidence to slowly build those positions, right? Joy, put those sevens, right?
appreciate
That's
that.
having confidence in your trade idea and building those positions, saying, hey, I believe in what I'm saying fundamentally. At some point, keep stacking these small positions. It's going to turn over in my favor.
I have a
It's going to,
confession.
yes.
I don't know who said it, you or Ryan, but I am sure acting like this prop trainer is company coming over because I don't know why I didn't put that EJ trade in my Darwin and it sat
Mhm.
in my personal and I'm like, I'm scared to put it in there. But
Yeah. Yeah.
so now
Yeah.
I can see and feel that.
Oh yeah. Oh yeah. You really gotta analyze and evaluate. Work your risk management out. It does. It forces you to think, on just on a whole nother level. A whole nother level. That's good. But you'll be all right. You'll work your way through it. You'll work your way through it. I know exactly what you mean, though. Exactly what you mean. So yeah. So let's look at this Aussie dollar joy. I've been there many a times. So also work, Ryan, on those yen crosses.
Appreciate that.
Yeah, 'cause I think they're gonna step in again because I just don't I don't that move so far. I'm like that, that didn't do a ton as it relates to what the speculation is in regards to how large the intervention was. So
Yeah,
it's-
I think so too. I
yeah,
think
so we'll
at
see.
least one more time.
Yes, yes, at least one more time, and it might be a big one too. So let's see. Aussie dollar. Okay, Aussie dollar. This is where we are. So we've gotten a pullback. Okay, bit of a crown type action there. So we've gotten a pullback, and now it's looking like we're turning over. Right. Again, we're reviewing these just ahead of non-farm tomorrow. Okay. So when we were looking at that DXY, if we are at the bottom of that range on the DXY and we get positive non-farm data, we may see dollar strength move to the upside and we'll see this continue to move down. All right. We'll see this move down. Okay. So let's see what happens there, right? Because on this And the sub-fib, that's what we're looking like there. So when we talk about trend line breaks and pullbacks, that's pretty nice. Okay, on this Aussie dollar. That's pretty clean right there. Doesn't get any better than that. Now we'll see stochastic is lining up. So if you had rules on a trade, okay, so this is your capital fib. All right. If you had rules on the trade where you say, you know what, I like to put that stop above my C high, which some of you do. Okay. And I look for breaks, trend line breaks and pullbacks. All right. This is your classic setup there. All right. I will put it right above that high, like that. And see if we can get the move down. Okay. So you can have a level here. Right. Can't tell if we got that. Let's see something real quick. 65,496. 65,486. So we're still projecting a D extension here. 1618, right? So you got a downside target there. Okay. And we still have this overall target. Okay. To the 1.618 on a larger move. Okay. Drop me a 1 in the chat if you get what I just did there. That makes sense to you. Okay. All right. So if you're already short, you know, if you got short off the 61.8, then you're already live and active in this move. If you haven't, there's a potential opportunity there, really. So if you like tighter stops, though, that's your move, right? That's your move, right? This is your original setup here. Stop above the A, like that. Okay. So where we are now on this larger play, okay, you got 154. And about 344, I'll call it 345. So we'll call it 155, 345 to the downside, okay, on a larger play. Okay. So where it is now, just above a 2-to-1 on that we're swinging, right? Now, if right, we play this here, okay, and we move down, okay, looking at, call that 70 pips, okay? If we move down to that D extension, you're looking at 130. But if this is going to be my initial entry for the hold to the D extension, right? Now we know, now we got 70 on 345. Okay. So you do your math. So you do your math on it. Okay. Either way you're playing that. All right. So for example, if you have your Darwin, right? And you played the larger play with that 155 pip stop. Say you only wanted to risk, if you're in Darwin, they start you out with 100,000, right? So if I only want to risk 0.25% of that, what am I risking in terms of dollars and cents? Right? $100,000 account. Yep, you're risking 250. Jeremy put in there 2-to-1. Yep. You're risking 250. So if I take that 250, right? Now divide that by 155. I'm coming out at about $1.61, right? So $1.60 that I'm trading that at. Okay. So if I trade that at $1.60 and I hit that 345 target over time, right? I'm looking at $552. Okay. $552. So 552. Now, if I play that smaller move, right, price trading off that C, so I'm tightening that stop, and I risk that same 0.25%. Okay. It's 250 divided by 70. I'm trading it at $3.57. Call it $3.60. Okay. So now I'm trading at $3.60. Now I'm at 1,242. Right. If we stay disciplined, regardless of what setup you trade, you're risking a 0.25%. That means I've got to lose 4 trades in a row, okay, to be out of 1%. Think about that. Okay? 0.5%, you guys know how to do the math. 1%, you know how to do the math. Right? So do we think if we stay disciplined, do we think that at the bare minimum, it will be hard to make 1 or 2% per month as we grow and we continue to develop and wait on our patience, wait on our setups? Do we think that's going to be the hardest thing in the world to do? Yes or no? Anybody?
No.
Okay. So just stay within your framework. Right? Stay within your framework and be patient. That's what it takes. Yep. 0.25% play gives me 400 chances to stay in the game. Exactly. Right? 400 chances to stay. Even at 1%, think about that. That's $1,000. You guys, if you stay disciplined within your framework, right? I went with a 0.25%. But even if you stay within your framework and you only trade your sweet spots, okay, and you stay disciplined to your risk management, you're not gonna lose 100 trades in a row. And I'm only talking about a 0.25%. Right? Just shows you the power and the potential of what we do. Any questions before we close out? Pips and percentages, everybody. Pips and percentages, right? Always do the math, right? You guys understand the technicals. You understand the fundamentals. Now it comes down to your patience and it comes down to the math. The patience to wait for the trades and the patience to once you take the trade, right? That we're never looking back once the trade has commenced. Okay. Ryan, anything before we wrap things up, sir?
No, sir. Great session, man. Appreciate you.
Yep, indeed. Appreciate you as well. All right. So that is it for today's session, everybody. We will see you back tomorrow, 6:30 a.m. Eastern Standard Time for the pre-New York session. Hey, don't just count your pips, but always count your blessings. Have a good day, everybody.
Thank you.
You're welcome.
Thank
Thank you.